Good morning. Welcome to Stock Market Today. It's Tuesday, August 20th, 2019. I am your host, Dan Russo, Chief Market Strategist at Chaikin Analytics. You can find me on Twitter. I'm at Dan_Russo_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to ChaikinAnalytics.com/today. Sign up for a free email. Follow along with this show. Get daily stock ideas for you to consider in your inbox every trading day before the market opens. And in addition, you'll be able to follow along with this show because a lot of the content that I pull for this show comes from that email. So U.S. equities closed higher in Monday's trading, ending just off their best levels. All sectors moved higher again, led by energy and tech. Treasuries were weaker across the curve. 30-year bond is now firmly above 2% after breaching that level late last week. 210 spread is at about 5 basis points after inverting last week. The dollar was stronger versus the yen and the euro. Gold was down 80 basis points, and WTI crude rallied 2.5%, and that helped the energy complex. Main driver of strength in the market was centered around China, where the PBOC unveiled rate reforms to help push borrowing costs lower, kind of joining that parade of countries lowering rates. At the same time, the U.S. has given domestic firms an additional 90 days to deal with Huawei. As we get to the desk this morning, futures are down 10 basis points after U.S. equities rallied over 1% in consecutive sessions for the first time this year. Asian markets were mixed overnight. European equities are mixed to slightly higher. Treasuries are stronger with the curve flattening. The dollar is weaker versus the yen and euro. Gold is up 20 basis points, and WTI crude is flat. So let's dive in, look at the market, see what we have here. Monday follow through on Friday strength is how we're seeing it here. We have a gap open for the S&P 500 into the resistance zone between 2,900 and 2,950. Support remains 2,800 to 2,850 on the downside. And now the 200-day moving average is going to begin to come into play within that support zone as well. One of the concerns that we have so far with this rally is that the RSI has not been able to get above 50. We want to see the RSI shift to bullish ranges to give us an indication that momentum is behind the trend. If momentum's not behind the trend, probability favors it not lasting and likely reversing. Chaikin money flow is bullish, so the indicators are mixed, but momentum is the key here. We want to watch RSI for our clues. If the market starts to fail at 2950 and the RSI never got much above the 50 mark, probably want to look to raise some cash, get a little bit more defensive. And you can see the sector rotation is pointing to it. We'll take a look at that a little bit later in the show today. Market in a minute now. Stocks follow through on Friday's strength. China joins the ranks of those lowering rates. The Huawei reprieve gives a boost to the tech sector. Relative trends continue to favor defensive sectors. Now, futures do point to a flat open today. As I said, we've been oscillating above and below the zero line this morning, and I've been at it since pretty early. Look at the power bars now for the major indices. The Dow, 9 to 4, bears to bulls. S&P 500 adds 1.2% yesterday, 101 bears, 91 bulls. Even after a 1.5% pop yesterday, the NASDAQ is still skewed in favor of the bears, 25 to 23. Small caps up 1%. Notice underperforming, back to that trend. 426 bulls, 350 bears, the only major index skewed in favor of the bulls. Bonds down tick, some profit taking there, sending yields higher. Energy was the big leader. Up 2.2% on that rally in crude. But energy from a trend perspective, as those of you who get my note will see this morning, just remains in a dismal downtrend. Continues to be an area of the market that we want to avoid. 19 bearish or very bearish stocks. Only 2, count them, 2 bullish or very bullish stocks. According to the Chaikin Power Bar, small cap stocks remain somewhat more bullish than large cap stocks. Major indexes are mixed. Let's hit our stock of the day now. Auto-generated by our algorithm based on the Chaikin Power Gauge rating. And this is going to be a great example of what we talk about when we say waiting for premium setups in this volatile market. Reliance Steel closed at 98.92, up 1.36% yesterday. Very bullish rating due to very attractive financial metrics, very strong price volume activity, and positive export activity. Stock does have weak earnings performance, but when we roll up the 20 factors, 5 in each of these 4 categories, we come out with a very bullish rating, very bullish stock, strong trend, strong industry group, type of name we want to consider. We can see it here. Look, Very bullish, outperforming. Not only is the stock oversold, but the indicator is rounding higher. That will get this green. Bullish money flow above a rising long-term trend line as it consolidates after a positive earnings surprise. When we drop down the checklist, we can see that all 6 boxes are checked green here for Reliance. Does this mean Reliance is guaranteed to go up? No, but it's a high probability setup. It's a quality setup. You want to take quality setups and manage risk. I like being long RS as a bullish idea. Take a look at Reliance Steel today if you are looking for ideas to add to the portfolio. Taking a look at our sector tracker now. Moving to the major sectors over the last 5 days. Quite the shift after a 2-day rally. Staples remain at the top of the list, though. So still have those defensive properties, but nice to see tech coming on strong on that Huawei news. Utes and REITs and healthcare also defensive to round out the top 5. Comms, industrials, and fins are middle of the road. Discretionary materials are positive, but towards the bottom of the list. And energy is the only group negative over the past 5 days. Even after that huge rally yesterday, still negative over the past 5 days. Energy continues to be an area of the market that we want to avoid. Another area of the market that does not look good that we want to avoid is our industry in focus today, and that's telecom services. Over the past 6 months, this subsector has underperformed the S&P 500 by 13.5%. And we think that trend of underperformance is likely to continue because the power bar ratio is weak. 12 bearish or very bearish stocks, 7 bullish or very bullish stocks. That's currently ranked number 16 of 21 subsectors. Some of the names there that you certainly want to avoid or maybe even look for opportunities on the bearish side. IDCC, Interdigital Inc., Boingo Wireless, ticker symbol Wi-Fi, and Viasat, VSAT, all with very bearish, Chaikin power gauge ratings. Now let's take a look at XTL here. You can see very clearly that the ETF that tracks this industry group has a bearish rating at Chaikin Analytics. Bearish rating, weak trend, underperforming the market. So same analysis applies. Bearish rating, underperforming. At the very least, you know you don't want to touch it. Now, money flow hasn't really given us much of a clue here. It's been a mixed bag, but from a trend perspective, you can see the fund is below a declining long-term trend line. So that is obviously something that we want to avoid and maybe even start to look for opportunities when the overbought, oversold indicator rounds back up to an overbought position, right? And this environment where the market is choppy, where we expect a volatile trading range, where the seasonals are working against you. Remember, we've talked about how August and September are seasonally weak months for the market. You really want to focus on what's outperforming and avoid what's underperforming, and that's what we're going to help you do each and every day. Taking a look at what's trending now, yesterday's S&P 500. Gainers and losers are mover and shakers, Estee Lauder, up 12.5% following their earnings announcement. NVIDIA follows through. Remember, we've been highlighting semis, and we've been talking about the fact that semis have been holding up. And if you remember, yesterday we had CLAC. And a couple of weeks ago, we had Micron as long ideas. We've been selectively finding the names. For those of you who get my market survival guide last Tuesday, we were highlighting Lam. Stock's been a monster since we called it out, right? Semis are holding up. NVIDIA following through likely helps there. Wins up 6.5%. They are a play on China. Kohl's up 5.9% yesterday. Their earnings out this morning, and they beat. And then DXC actually won a dispute with Hewlett-Packard Enterprises, so getting awarded some cash. That stock up 5.66% yesterday. ADS follows through to the downside, but again, another strong day in the market yesterday, so the downside is not all that extreme. DaVita announced results of a Dutch auction, sent that stock lower by 1.5%. Nectar, no real news there, but I will note that since being added to the S&P 500, this stock has been an utter disaster, down 1.25% yesterday. Centene down 1.2%, starting to look for RFPs in Texas, and Centene is seen as having some market share at risk there. So investors looking to lighten up positions in Centene heading into that event. And Newmont Gold gave some back yesterday. Newmont was lower. There was actually a positive article, takeaways on their merger with Goldcorp in the Wall Street Journal yesterday, but the stock was still lower by nearly 1.2% on the day. So those are your movers. Those are your shakers. It's Thursday. I'm sorry, it's Tuesday. Getting way ahead of myself. I am still on vacation as I record this show. Relative trends favor defense. On Tuesdays, we look at the sector relative trends in the marketplace, and we look across time frames. I look at some trend work, longer-term trend work, and some shorter-term sector rotation. The shorter-term sector rotation, you could see here pretty clearly that the defensive groups are making a beeline to outperformance, right? I mean, just straight line, solid outperformance. No wavering here. We've been calling it out for the past 2 weeks that it's been going that direction, and now it's played out. We've been calling for lower yields as well, which has helped the REITs and the Utes. Staples and healthcare is on the verge of breaking into the leading group. Now, tech is weakening of late, but we'll take a look that from a longer trend perspective, it's actually beginning to reassert itself. Energy remains a group to avoid. Discretionary weakening, industrials weakening, financials finally, rates finally catching up to those guys. Financials are actually trying to hold up, and now the rates are just too much. The declining rates are just too much for the banks, and it's starting to drag down the group. Watch the comms here. They've just kind of been churning, but really the theme is defensive outperformance. And take a look at a group like REITs breaking out on a relative basis. Here we're looking at XLRE relative to the SPY, so the real estate sector relative to the broader market. And you can see a nice steady uptrend, a nice steadily rising 200-day moving average of the ratio, right? Finds support, quickly rebounds, and now breaks to new highs on a relative basis. What is this? This is falling yields. This is defensive positioning as volatility has picked up in the market. Whatever it is, the trend is in place, right? When you're looking for leading areas of the market, what's leading right now? REITs, utilities, staples, and tech. In the near term, though, this trend looks a bit overbought. But what's interesting to me is the RSI of the ratio has not become oversold. Really hasn't really become oversold since back in the April timeframe. So solid momentum backing this trend, and on an absolute basis, you can see the REITs breaking to new all-time highs. And in a nice steady uptrend. I think if you're looking for long ideas, I think you'd be remiss if you did not check out the real estate industry group. Technology is another area. So it's kind of this interesting dynamic at play. And we've talked about this in the past, that in a slowing growth environment, which is what we have here, two themes that you want to focus on are growth and rate sensitive, right? Hard for rates to go up in a slowing growth environment. So REITs, utilities do well. But at the same time, in a slowing growth environment, investors are willing to pay a premium for growth. You've heard me talk about this. Tech, obviously seen as a growth area, so it's uptrend reasserting on a relative basis. XLK relative to the SPY above the 200-day moving average went into a bit of a consolidation, right? We started to think about potentially this being a false breakout, but we've reasserted to the upside. Notice that RSI has held in bullish ranges, and on an absolute basis, tech has held its uptrend and is now beginning to move higher. What's interesting to me is some of the shifts that are taking place within the tech sector. For those of you who read my market survival guide, we talk about one of them today. Software no longer leading. The leadership within tech has shifted to the semiconductors, group you've heard me talk about. We just talked about it earlier. We've been highlighting bullish ideas in the semiconductor space. You see how it works? Leading stocks and leading industry groups, and we keep rotating. We don't remain dogmatic in our view in any way. And for those looking for a stock idea, T-Row is my bullish stock of the day. In my notes, Jake and Analytics clients today, very bullish stock, strong trend, strong industry group, outperforming the market, overbought, oversold indicator, starting to move higher from an oversold position after the stock holds support at the rising long-term trend line. I see continued upside and outperformance for T-Row. Here I have made it my bullish stock of the day in my note to Jake and Analytics clients, and you've heard me reference my market survival guide. Here's the site where you can go check it out. It's a weekly action plan for surviving and thriving in any market. I will be back here tomorrow. Have a great Tuesday, everyone.